Is India's economic growth just an illusion? The government proudly projects a 7.2% GDP growth for FY25, but most Indian companies are barely scraping by with sluggish earnings. Is this growth truly benefiting you, or is it just another economic mirage? Let's break it down. Hey, I'm Ashish, and today we are uncovering one of the biggest paradoxes in Indian economy. GDP is booming, yet companies are struggling. What does this mean for you as an investor, a consumer, or even a job seeker? Stay with me to find out. Here's the headline. India's GDP is projected to grow at 7.2% this year, driven by agriculture, services, and government spending. But in Q1 and Q2 of FY25, net sales for major companies grew by only 7% year on year, the slowest in 5 quarters. Meanwhile, profit margins for Nifty 50 companies have shrunk from 15.3% last year to 13.8% this year, highlighting the growing cost pressures. Now, why should you care? A booming GDP should ideally lead to better jobs, higher wages, and a thriving stock market. But when companies are struggling to grow profits, it impacts everything from job security to salary hikes and even returns on your investment. Let's take inflation for example. The consumer price index surged to 6.83% in August, making everything from groceries to utilities more expensive. For the average urban household, this means tighter budgets and less spending on non-essentials. So what's driving this paradox? Let's dive deeper. 1. Inflation is squeezing profits. Rising input costs are hammering businesses. FMCG companies like Hindustan Unilever reported a 9% revenue growth, but its profit after tax fell by 7% due to rising raw material costs. Even manufacturers are struggling with higher commodity prices. Second, urban consumers are holding back on discretionary spending. In the retail sector, for instance, Titan reported a mere 5% growth in its jewelry segment for Q2, far below expectations. This signals that even high-end consumers are feeling the pinch. And third, export-driven sectors like IT and pharmaceuticals are grappling with weaker demand. Infosys, for example, revised its revenue growth guidance down to 2 to 3%, citing a slowdown in global IT spending. So why is GDP still growing? While these challenges have weighed down certain sectors, there is a surprising undercurrent that's driving GDP growth. Agriculture and services are outperforming. In Q2, the agriculture sector grew by 4.4%, supported by robust monsoon-driven output. The service sector, which contributes to over 50% to GDP, grew by impressive 9.3% thanks to sectors within IT services and financial sector mainly. Both sectors have outpaced their growth averages from previous year, signaling a stronger than usual contribution to the economy. And this is not the first time we have seen such a paradox. Back in early 2000s, India saw a strong GDP growth driven by rural demand and government spending, even as the corporate earnings lagged. History seems to be repeating itself, but here's my bold prediction. As inflation eases and consumer demand recovers, we'll see a corporate profit catching up sharply by Q3 FY25. Sectors like infrastructure and consumer staples could lead this recovery with double-digit growth potential on the horizon. So how can you navigate this tricky landscape? First, don't be swayed by the GDP numbers alone. Look at the sectors and the companies that are truly benefiting from this growth. Companies like Larsen & Toubro are set to gain big from government infrastructure projects. In consumer staples space, ITC continues to perform well, leveraging steady demand for everyday essentials. On the flip side, be cautious of sectors that are highly reliant on global demand. The sectors in IT as well as export-heavy manufacturers could face prolonged challenges as global uncertainty persists. In fact, on my recent trip to Chennai, I spoke to a local entrepreneur supplying materials for government-backed infrastructure projects. His business saw a 20% growth this year thanks to increased government spending. However, rising input costs have squeezed his margin, showing the dual impact of this economic dynamics which we have just talked about. But here's a silver lining. Historically, corporate earnings do tend to catch up with GDP growth. So as inflation stabilizes, as we talked about, and consumer demand improves, there will be that strong rebound which will come in the next 2 quarters. Let's be real. Inflation is like a friend who borrows money and forgets to return it. It's sneaky and frustrating. But understanding how to outsmart it is the difference that you can make in your financial journey. If you're ready to stay ahead in this complex economy, hit that subscribe button. I'll bring you daily insights that decode the numbers and help you navigate the market with confidence. Like this video if you found it helpful and share it with your network. Stay curious, stay informed, and let's decode these complexities together.